Welcome to our weekly Forex forecast. Thank you for joining me today. And this is for the week of March 16th to the 20th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. So the past week has been absolutely crazy in terms of what's going on in the markets as well as what's going on around the world. So we have seen a number of cases that have been reported around the world. So it looks like China is starting to come out on the other side of this virus. They have reported a number of huge over 70,000 cases that have actually made it through the virus. And the number of new cases that they're discovering has been declining. Now with China, we don't really know the real numbers, but the expected numbers are much higher, but it also means that the expected recoveries are much higher as well. And now we have seen the focus or the center of the virus activity has moved to Europe. So Italy is completely shut down at this point. Everybody is essentially quarantined. They're only allowed to go out to get groceries or for some emergency reason. And everybody's checked when they are leaving their house. And now that may now spread to other European countries. None of the other European countries are actually, the major ones are not in lockdown at this point, but we could see a spread, as well as the virus is spreading in North America as well. US is seeing a lot more cases. And I think there was some sort of denial in the US that the US would not get the virus, or it wouldn't happen to them. But unfortunately, that caused a lot of misinformation and delay in receiving the supplies. So the test kits didn't come through, and we are seeing that in Canada as well. There is a shortage of test kits, and the emergency workers, or just the health workers who are testing the people, they are completely inundated with the number of calls that they're receiving for the test. So what that tells us that overall, the number of people who are actually infected by the virus is probably a lot more than what is being reported at this point, but the number of infections that are being reported have gone up considerably. So essentially, and the way this has the reaction to this in the markets has been a lot of fear. And as a result of the fear and the Wall Street basically crumbling, or I should say stock markets around the world have been crashing. And as a result of that, the central banks have stepped up with a lot of monetary policy measures. We have seen Bank of Canada cut rates twice. They have cut the rate by essentially 1%, so 50 basis points each time. And last one was done on Friday. This was an emergency rate cut that nobody had expected quite so soon. Now we do have Fed coming up. They did do an emergency rate cut of 50 basis point, and we may see another one this week, essentially, which is basically priced into the market. And then we had Bank of England did an emergency rate cut. ECB did not do it, but they're already at 0%. So there isn't, so basically they'll be going into the negative, but they did say that there was going to be more money put into the market. And then central banks around the world are basically interfering in the markets right now, because they are, in order to support the markets, they are buying securities in the markets, which pushes things higher. And this is why we are seeing so much back and forth in terms of how the prices are moving. Bank of Japan essentially said that they are open. They didn't actually come out and say that, but they said no comment and in regards to whether they are doing an intervention. And prior to that, they actually said that they are open to doing an intervention. So I think we have been seeing intervention in the markets, especially in the Japanese yen, because we saw that shoot up. Usually what we see is US dollar is a safe haven currency, Japanese yen, Swiss franc is a safe haven currency. And it seems like both Swiss National Bank as well as Bank of Japan are intervening in the market at this point in regards to currency manipulation. And the reason they want to do that is because when their currency becomes goes up so much, everything, all the exports out of the country become super expensive, and that has a negative impact on the economy essentially. And already the economy is being impacted with all these shutdowns. So here in Canada, we know Vancouver and Toronto, basically schools have been shut down, universities are shutting down, no more big large gatherings that are at least at this point, they are suggesting to not have these gatherings. We may soon get a law put into place that will basically make sure that this does not happen. Huge, all the games, NCAA, NBA March Madness is canceled, which is billions of dollars worth of business. And then overall, just all kinds of NHL got shut down, so no more hockey. So overall, a lot of stuff is being interrupted, and that causes a lot of problems in the economy, because when people are not going to work, that means the businesses are not operating. And when the businesses are not operating, that means money is not being made. People are not getting, they will not get paid, although the governments are taking fiscal policy action in terms of supporting the people who are required to quarantine themselves. But overall, it is a big mess. Brad, I agree. What a huge mess around the world. And we are seeing borders being shut down. I think it was Friday or Thursday or Wednesday, President Trump announced that all the flights out of Europe will be shut down. So right now, as of Friday, they will be shut down. So right now, flights out of Europe into the US have been shut down. Canada has been telling all the citizens to come back to Canada from wherever they are before travel restrictions get put into place. I know a lot of others, there are a few other countries that have basically shut down flights either from certain areas or just flights are like airlines are canceling their flights. So airports are a complete mess at this point. And Osif here says that Denmark is shut down as well. So overall, we are seeing a huge mess around the world. And basically, the world has not seen a pandemic since 1918. So even though we are a little bit more prepared for it in terms of what to expect. So there was SARS and MERS and all these things. So because of that, there are some procedures that have been put into place. At this point, though, on the positive side, because this has been going on since December, and we first found out, or people first found out in December, that this was happening in China. A lot of people are working on this, isolating the virus as well as developing vaccines for it. However, we don't actually currently have a vaccine or a cure for this. So the disease basically, or mostly, I should say, impacts people who are 60 or older. However, there have been known cases of younger people also getting impacted by this and getting pneumonia and stuff like that. So that's what's going on in the market. And this is why there is such a scare, because one, there's no cure. So physically, it's impacting people around the world. There's a lot of fear. And as well as this is impacting the markets, because for us, we are seeing that stock markets around the world are crashing because, like I said, it disrupts the economy when people stop going out. They're not allowed out, or they choose to self-quarantine. So that's what is causing all these disruptions. And also with China being shut down, there were a lot of supply chain disruptions because China is such a big manufacturing hub. So all the other, or a lot of other countries depend on Chinese products, either fully manufactured in China or parts that are manufactured in China that get shipped out to the rest of the world. So the supply chains have been disrupted. So manufacturing shutdown in China has resulted in other businesses around the world being impacted and being shut down. So this is overall what's going on. Just wanted to do a general view of as things stand right now. So back to the markets in terms of intervention from the central banks, as well as all these fiscal policies and stuff that are being put into place. We are seeing a lot of back and forth in the markets. We are seeing strong selling and then quick buying and reversal. That has been crazy. So I would say expect more intervention from the banks going forward. Bank of Japan especially, they have been trying to support the currency. We saw that they were having a lot of meetings between the finance minister, Bank of Japan, and basically what they're trying to do is doing coordinated action in order to protect their currency. So that's overall a picture of what's going on. So now let's take a look at what do we have coming up this week. On Sunday here, we do have industrial production numbers. They are expected to drop quite a bit, which is reasonable because factories have been shut down for quite some time. So if the number is below this expected number, we could see an impact in New Zealand dollar and Australian dollar. Basically, those could drop further. And then we do have G7 meetings. So the different countries, now the G7 countries were supposed to take coordinated action, which they have done. The different central banks of all these countries have announced tax cuts or monetary policy stimulus for the markets. So keep an eye on what comes out of these meetings, the comments that come out, because they will have an impact on the market. Now, we do also have Empire State Manufacturing Index. That is also expected to drop substantially. So again, if it's below this, we could see a negative impact on the US dollar. So far, we were seeing that euro was going up because of the unwinding of the carry trade, because of the basically low interest rates or extremely low interest rates in euro. People were, or the big institutions were borrowing money in euros and then bringing it into the US in order to buy the treasuries or even stocks and stuff. And as Wall Street has dropped, all of that money is basically being taken out and converted into euros, which was pushing the euro up. So euro was basically going in the opposite direction of what it should be doing, because basically US dollar should have been going up. And then we saw a complete reversal of that. All of a sudden, that carry trade stopped unwinding and a lot of flows went into the US dollar. And that's why we have seen the US dollar become so strong recently. So basically, we'll have to keep an eye on things like that as well, that are not reflected in the news here. And then we have a monetary policy meeting minutes here from Australia. Australia has cut interest rates, and we'll have to see if they cut them even more. And if that happens, we could see Australian dollar drop further. If they don't cut rates, like we saw euro, ECB did not cut rates, which kind of supported the euro. So if this happens, if they do not cut rates, then Australian dollar may be supported and we may see Australian dollar go up. And then we have average earnings index here for British pound employment data. Essentially, generally, now we are not likely to see the impact of the virus on the markets just yet, because now the focus has shifted from Asian countries to Europe and then to North America. So these things generally take a while to play out. Like we saw, now we are seeing, expecting a decline in industrial production in China, whereas the virus has been there since November. So now it's been a few months later that we are expecting the repercussions from it. So these numbers may not reflect what's actually going to happen in the markets or is currently happening, because these are previous numbers. So take them with a grain of salt. So if the numbers are holding up, we could see British pound go up. British pound has just tanked, just completely broken down. So with such a big move, we could see reversals in it. So keep that in mind. But if the numbers come out a little bit better than expected, we could see British pound being supported as well. And then we have German ZEW economic sentiment number. Look at the number, it's expected to drop substantially. Now, if it drops even further, that will be negative for the euro, and we could see euro drop as a result. Canadian dollar has been butchered because of basically double whammy here. One, virus issues, which Canada is now grappling with at this moment. They're slowly, basically, it's spreading in Canada, but also because of oil. So what happened with oil was OPEC met and they decided that the different OPEC countries would cut production. However, so Russia, they were trying to negotiate with Russia to cut production as well, because it doesn't do them any good if Russia keeps supplying oil at higher product or at increased productivity. But Russia then decided not to go along with them, and instead they said they were going to increase production instead of decreasing it. And as a result of that, we saw Saudi Arabia basically declare a price war with Russia, and Saudi Arabia then went up and increased their production, which basically made OPEC fall apart in terms of their the agreement that they had reached. And as a result, we saw oil just dropped, like, you know, there was no dropped off of the cliff. And that is bad for Canadian dollar because Canada is an exporter of oil as well. So Canadian dollar took a huge hit as a result of that. We also saw all the commodity currencies essentially drop, Australian dollar, New Zealand dollar, but Canadian dollar is more tied into the oil. And we saw Canadian dollar take a huge hit last week. So we'll see what, or we need to keep an eye out for how things develop around oil. So not just the virus, but also what's going on with the oil at this time, because it exacerbates the problem, makes it go higher. Okay, so that's, and then we have retail sales numbers for US coming up. And again, like I said, the impact of virus has not been felt in what do you call it, in the US just yet, but we will see how that plays out. So if the numbers drop, we could see a negative impact on the US. And then of course we have a whole bunch of numbers coming out from the US here. They may not be as positive as this one shows here. We could see a drop in that. And then we also have Eurozone numbers here. CPI numbers are important numbers that the central banks keep an eye on. CPI numbers, if they drop, that will be negative for the euro. But right now, I think we're just going to have all the numbers will be kind of out of whack, and the market may not pay as much attention to the data that's coming out, because a lot of these moves are sentiment driven. And then we also have CPI numbers, which are inflation numbers, again, coming out of Canada. Again, these numbers may not be meaningful going forward, because all the central banks, or a lot of central banks around the world, are cutting interest rates. So CPI numbers will get thrown out of whack because of that. And of course, we have FOMC, so the Fed is expected to cut rates. So we also saw President Trump over the weekend was also again bashing Fed chair over Powell over not taking aggressive action in terms of what's going on with the Fed rates. So although the Fed did do an emergency cut of 50 basis points, and now we are expecting another cut of 50 basis points, bringing the interest rates to 0.75%. So that actually is likely to have a negative impact on US dollars, because basically the yields are going down here. So keep an eye on that. We could see US dollar drop as a result of that. And then we have GDP numbers out of New Zealand, which are likely to drop. But again, if the drop is already higher than what's expected here, then we could see New Zealand dollar drop as a result of that. And of course, we have employment numbers out of Australia. So Australia and New Zealand got impacted by the fallout from the virus quicker than the rest of the countries, because they are so closely tied into China, because they are big exporters to China. So we're likely to see this impact before we see it in UK and the US and Canada, for example. And we have Bank of Japan monetary policy statement here. Bank of Japan, essentially, they are already negative in terms of rates. So they did say that they may cut rates more. However, it's hard for them to do that because they're already negative, but they are doing other things like buying up they're buying up their the securities. That means they're trying to prop up the market like all the other central banks around the world. But they're also intervening in the Forex markets, which will have a direct impact on us. So when Bank of Japan intervenes in the market, essentially what they're doing is they're selling Japanese yen in order to make the Japanese yen drop, which means the yen crosses go up. And we saw this last week when US dollar was strengthening, which means all the US dollar crosses were dropping, but then we saw yen take off in the other direction, which does not make sense because both US dollar and Japanese yen are safe haven currencies, which means they should have been dropping. All the yen crosses should have been dropping as all the US dollar crosses were dropping, but we saw this huge push up in the Japanese yen crosses. So watch out for that type of action from Bank of Japan. And then we have Swiss National Bank monetary policy assessment. At this point, they are already hugely negative in terms of the interest rates. So we're not expecting another cut, but just like Bank of Japan, Swiss National Bank is notorious for intervening in the Forex markets. They don't want Swiss franc to be very expensive because, again, it has a negative impact on the economy. So they tend to go sell Swiss francs all the time, just like Bank of Japan. They do not, they don't want their currency to go up because of events that are out of their control or are not related to their country. It's more events around the world, which makes sense. But right now, not expecting an interest rate cut. So from both Bank of Japan and Swiss National Bank, it will more be we're looking to see what kind of monetary policy action they'll take, because they will take monetary policy action, but they may also try to move the market just with their words. So keep an eye out for that. If they say they're going to take aggressive action, just saying that may move the market because it changes the sentiment in the market. So that's that. And then we have retail sales numbers here for Canada. Again, these numbers will not be as meaningful because a lot of it will be driven, especially in the US and Canada. A lot of the moves will be driven by what's happening with the virus. So if the fears around the virus spread more, we're likely to see a negative impact on both of these countries. All right, so let's go on to our charts now and see what's going on in the markets. So we'll start off with Euro. Starting the week off, Euro actually jumped up last when the markets opened on Sunday, but since then it has come down. So we have a huge move. So the move up was because of the unwinding of the carry trade, which means people were selling the US dollars or moving the money out of the US and buying euros to move it back into the euros, which caused euro to go up. And then we saw normal flows, which means US dollar got strengthened, and that caused a drop here. So with this one now, bias is to the downside. Generally, when there's fear in the market, we generally see US dollar and Japanese yen strengthen. So bias here is to the downside. However, I would be cautious with just overall moves in the market because of all these central bank interventions and stuff like that. We haven't seen this type of activity in a long time. So just be careful of that. So till we get to the point where there is a vaccine developed. So when the vaccine gets developed, we are likely to see Wall Street go up, all the stock markets around the world go up, and we're likely to see Japanese yen crosses go up, US dollar crosses go up. But until then, there will be fear in the markets, and we can see this back and forth. So things will go up when central banks are intervening. They may drop when they let up, but they are going to keep on intervening. So just be mindful of that. US is not intervening in the currency markets at this point, but does not mean they're not going to. They are just waiting to see how things unfold at this point. But do keep an eye on how US, what comments are coming out of, especially from President Trump, because things can be volatile in that regard. But overall bias here is to the downside. We could get a pullback into 1.1180 or even into 1.1200 and then a drop from there. So basically either a pullback into 1.1200, sorry, 1.1200, 1240 or 1180. Those are the three levels I would watch in terms of a pullback, but overall bias remains to the downside here. First target would be 1.1050, and then below that we're looking at 1.0900. It could also go all the way into 1.08 into the bottom here. So overall bias is to the downside for euro dollar. Pound, like I said, just took a dive here, huge move to the downside. Now, the bias is to the downside, but in the short term, we could see this one go up because it's been such a huge move to the downside. We could see price bounce. And then it may come back down again. So I am neutral on this, even though it looks very, very bearish. I would be, I'm neutral on this because we could see a move back up into 1.2530, which is about 300 pips. And we have seen some sudden moves in the market. Japanese yen, we'll take a look at those on Friday, just completely reverse directions. And it happens very, very fast. So just overnight, it was a completely different scenario. So keep in mind that for British pound as well. But overall, bias still stays to the downside. But right now, in the short term, it could pull back. So I am neutral. Brad, yes, 950 move, 50 pip move, huge. It's insane. We do not see this type of move in the markets generally. Yeah, almost 950 pip move there for British pound. So I would look out for some pullbacks. I'm neutral on this, like I said. Aussie dollar as well, we saw a drop here, a big move to the downside. And at this point, there is more room to the downside. Target here is 0.600. But like I said, watch out for some of this move to or price to go back up. I will look for a pullback either into 0.6250 or 0.6320 and then a drop from there. So I'm basically open to some pullbacks at this point, but does not mean that it will happen. Volatility is extremely high in the markets right now. Same thing for New Zealand dollar. New Zealand dollar actually did not do too badly, but it has dropped as well. So bias is still to the downside for New Zealand dollar. But as China recovers, I would expect Australian dollar and New Zealand dollar to start doing better. So keep an eye on what kind of stuff comes out of China in regards to the numbers that are being reported, the numbers that have improved in the sense that people who have recovered, as well as the people who are being infected by the virus or new infections. So overall bias here is to the downside. I would look out for a pullback potentially into 0.6100 or 6150 in terms of the pullback. It could go all the way into here, 0.6200, but watch out for some sort of a pullback before we see a drop here. Bias is still to the downside and looking at 0.5820 as the target for New Zealand dollar. Dollar CAD here, like I said, Canadian dollar just got beat down, not just with the virus issues, but also because of the oil situation. And the oil situation makes it very, very volatile because we don't know what to expect. With the virus, at least we can track the activity and what's going on around it. With the oil, it's completely based on speculation as well as the actions of Russia, Saudi Arabia, and OPEC. So complete sentiment-driven moves in that regard. So we saw a huge move up and then a drop here for Canadian dollar, dollar CAD here. And at this point, I would still expect weakness in Canadian dollar, but it can come back lower here before it moves forward. So with Bank of Canada cutting rates on Friday, we could see a further weakness in Canadian dollar, which means we could see another jump in dollar CAD. So the bias here is bullish, but watch out for a pullback into 1.3680, but overall bias is bullish for dollar CAD. And on the flip side, though, if oil prices go up, we're likely to see Canadian dollar go up, which means dollar CAD would drop in that. And then we have euro pound, which just took off to the upside here. Now with these moves, when the price moves so much, and then we have seen that in different multiple pairs, we could get reversals, and reversals can come in fairly fast and furious. So watch out for that. Right now, though, euro is stronger than British pound, so euro pound has been going up, but because pound is so stretched right now, it could go back up, which means we could see a drop in euro pound. So I would be cautious with this one. It still looks bullish at this point, but let's watch out and see what's going on with euro. So if euro and pound change directions, this is likely to change directions as well. So I am more neutral on this one, but we could get something like this as well. So a pullback into 0.8400 and then a further move to the upside, because still there's a lot of it just looks one-way street here. So I'm not too anxious to sell it at this point, but do watch out for pullbacks before we before this one goes up. And just the relative movements in British pound and euro, because if they switch directions, this is likely to switch directions as well. So neutral for that. Euro Swiss franc, this one has not dropped quite as much, barely any move in the market here, and that shows that Swiss National Bank has been intervening in the markets because if safe haven currencies are not going up, something is stopping them from going up, and in this case it may be intervention from the Swiss National Bank. Of course they don't come out and say that, so we have no way of really saying if and how much they have been intervening in the market, but price action reflects that there may be some intervention. But overall, though, bias here is to the downside for Euro Swiss franc here, and next target is 1.0400, and we could see a move even lower here. So bias is to the downside for, so first target 1.05 and then 1.0400 for Euro Swiss franc. Pound Swiss franc, on the other hand, has been dropping consistently because of the big drop here in British pound. So we have seen a huge move to the downside, but now, as we can see, for the last 4 weeks, we have consistently seen drops. But then again, we kept on seeing drops for a number of weeks here. They were just not as violent. So at this point, again, with British pound, I'm just overall neutral because we could get pullbacks in this. So keep an eye on that. It is also into support. So I'm going to be neutral on this. I'm looking for pullback either into 1750 here, even into 1850 before a further move to the downside. But right now we are going to see a lot of these currencies basically are going to be under pressure here. And right now, euro and pound overall may come into pressure because now Europe has become the center of the viral activity. The focus has shifted from Asia to Europe now, and then we are likely to see it shift from Europe to the US. So overall here, right now, I think the focus will be more on Europe and how everything plays out in Europe. And as we see more shutdowns, we are likely to see more of a negative impact on those currencies as well. So that is something that we do have to keep in mind. Overall, though, right now I'm going to be neutral just for the short term, but overall it's still Swiss franc is likely to strengthen just with what's going on overall in the market. So we could see a drop into 1400, but for now I'm neutral on pound Swiss franc. Dollar Swiss franc here. US dollar has done well. There have been a lot of flows into the US dollar, and as a result we have seen this huge move. Just we saw a drop and then it basically changed directions here. So this one actually looks bullish right now, and we may see US dollar strengthen further just because of it being a reserve currency and tends to be a safe haven currency. So we could see a drop into 94.50-ish level and then a further move to the upside, but bias here is bullish, and I would look for we could see a further move higher here. First target is 96.50, and then we have 97.20. So bias here is bullish, and we could get something like this. So bullish bias for dollar Swiss franc here. Euro yen, we saw a big drop and then a complete reversal here. And I would say that this was mainly a doing of Bank of Japan, because generally Japanese yen being a safe haven currency, it reacted the way we would have expected it to under the circumstances. When there's fear in the market, Japanese yen tends to strengthen, which means the yen crosses drop. But then we saw a huge move up in basically it was just on Friday here. It just changed direction completely, and the move up was 400 pips. Actually, no, from the bottom, from where it closed to where it ended up at the lowest point to the highest point here, over 400 pips in the opposite direction, which I would not have expected, but this is what tends to happen when the liquidity is low in the market and we have central banks intervening in the market. At this point, I am not bullish on any of the yen crosses. Yen is a safe haven, and I would expect it to react as safe haven. So I'm going to be neutral to bearish on this one. I would expect yen crosses to drop, but then again, these are not normal conditions, and with everybody essentially intervening in the market haphazardly and just trying to basically support their currencies and the stock markets, we are likely to see way more volatility in the markets as the different parties basically take action without really any kind of conversations with each other. So overall, G7 countries are supposed to coordinate their actions, but you know, when circumstances like this happen, that kind of goes out of the window. So right now, I'm not bullish on this. I think we are likely to see a drop. I would look for a move back towards 1600 here. But then again, huge bullish candle here. And when we have momentum like that, it could continue up further, and we could see price go higher. I'm not into buying this at this point though. But then again, keep an eye on how things unfold. So I am neutral to bearish on yen, on euro yen, and looking for a move towards 616. Pound yen, on the other hand, did drop a lot. There was a bit of a pullback here on Friday, even with everything that happened, like all the crosses turned around, yen crosses turned around. On Friday, not so much pound yen here. So this one is still looking bearish. But like I said, if pound turns around here, then I would look for a pullback, potentially into 134 before it drops further. something like this. Or we could even see a larger pullback just because pound has moved so much. Now it may pull back in the opposite direction. So we could get a move like this. So overall, all the yen crosses, I'm still bearish, but it does not mean that they will drop from right here. It means that we could still see pullbacks before they drop further. But overall, though, once we start seeing moves to the downside here, I would look for a further drop in the yen crosses. So, but watch out for pullbacks. First, bias is bearish, neutral to bearish here because of the pullbacks that we are likely to see. Dollar yen, though, this one just took off, especially on Friday here. We saw market drop and then price just took off from here. And just in between Friday and Thursday and Friday, the low to the high here, 550 pips. So that is not a normal move, which shows that there is something going on in the market that is beyond just the price action here. So a lot of volatility. With this one, I am going to be neutral because US dollar is still strong. So we could see if the Japanese yen starts strengthening again, we're likely to see a drop in this, but probably not as big a drop as we may see in Euro yen, for example. So my bias here is neutral, prices into resistance. So I would look for a move down from here. But then again, that's just based on normal things happening, and we are not under normal conditions. Yeah, Brad said 734 pip move. Yeah, that's crazy. We do not see that kind of moves. But overall, though, I'm just expecting market to be volatile here, and we have to just be very careful. Right now, I'm looking for a drop in dollar yen, whether that's an actual drop that takes us to the bottom, or we could just see something like this. That we have to see. For now, I'm neutral on dollar yen. Aussie yen, we did see a drop before it pulled back. Bias is still to the downside. Now we could see more of a pullback, but I'm looking for a further move to the downside here. Now, having said that, if we start to see more positive stories come out of China, so we saw that China was letting people return to work slowly. So if those both of those big cities that have been in quarantine, if they start opening up that like they have been doing, so if they open up completely, we are likely to see a short-term move up in Australian dollar and New Zealand dollar. So we'll have to keep on or stay on top of the news out of China in that regard, because it will directly impact Australian dollar and New Zealand dollar. But for now, this is the move I'm expecting. We could get a pullback into 67.80, 68 level, and then looking for a drop. First target is 64.35, which is the bottom of the current move. But then I would look for a further drop here. And I think as things deteriorate, especially in the US here, and also in Europe, I think there will be more fear that will come into the markets. And when there's more fear in the markets, Japanese yen tends to do well. It strengthens, which means the yen crosses would drop. So bias here is to the downside, but watch out for pullbacks. New Zealand yen, this one actually pretty much recovered the entire move. And we had seen a huge move and then a big recovery here. So overall, though, this one is still neutral to bearish. I'm not hugely bullish on this right now. So we could get a pullback all the way into 66.50 or even into 68. But for now, we are into resistance. And if price holds below this level, I would look for a further move to the downside. I'm not convinced that yen is actually weakening right now. Till this mess is sorted out and we see some sort of a vaccine or a cure or something, Japanese yen is likely to see flows back into it. And as a result, I would expect a drop in yen crosses. And then we have CAD yen. And as we can see, big drop and big recovery. And like I said, not quite convinced that it's bullish at this point, but Bank of Japan does have deep pockets, which means they can push things even higher. So can't argue with the banks. They will do what they will do. At this point, we could see a further move higher into 79.20-ish level, and then we could see a drop. But I am still looking for a bearish move though overall. But in the short term, we could see pullbacks, like I said. So my bias for CAD yen is bearish. It is into resistance where it is currently, as we can see. If it holds below 78.50, definitely looking for a move lower then. All right, so let's move on to our commodities here. Silver, a huge drop in silver. And usually we see silver and gold actually, they are safe haven assets. And generally we see a move higher in gold and silver when stock markets are dropping. However, right now we are seeing big drops in here. And the theory behind this is that big funds are actually, they're liquidating whatever they can in order to support their, they need to have enough money, essentially. A lot of them are leveraged, and as a result of that, there were talks about a lot of hedge funds having to cover the margins because they were getting margin calls and so forth. So it's not just retail traders that get margin calls. Big funds do tend to get margin calls under these kind of circumstances because we have seen that Wall Street was shut down because anytime the market drops more than 7% on the same day, they close it off for 15 minutes just to kind of balance things out and have people come out of that, take a breather, essentially, come out of that selling mentality. And because of that, I think it was a couple of days in a row or a couple of days last week, we saw stock market did that. So the theory is that big hedge funds and big funds are essentially selling their holdings in gold and silver in order to put money into the other losses that they have been taking. And as a result, we have been seeing these drop. So this is not a type of drop that we see under normal conditions. And right now, we are pretty much into support here, but we could see it go lower all the way into 14.00. So watch out for that. But there will come a time when silver and gold will start to turn around and actually go back up. So silver may be a good buying opportunity, not for short term, not with margin fund or leveraged funds, just as a holding. But right now, though, I think there can be more volatility. I think we are likely to see stock markets take bigger drops because short term, the central banks are trying to support the market. But if you've learned anything from the 2008, 2009 fiasco, markets can keep on dropping for a while, even with central banks' intervention, although central banks seem to be more coordinated at this point than they were back in the day. But like I said, these things can continue on for weeks on end. So at this point, we could see a further drop. I'm neutral on this at this point. I think we have already seen a huge drop. Now it can go into 14, like I said, but at some point I am looking for it to turn around. So right now I'm going to be neutral on silver, and then based on the daily moves, we'll see where this one may be going. For now, neutral on silver. Same thing with gold, a huge drop in gold, as we can see, and especially on Friday here, huge drop. So I'm not expecting gold to weaken when all hell is breaking loose in the market. But as we can see, like I said, the theory is they are liquidating their gold and silver holdings in order to move money, in order to avoid margin calls and so forth. So again, we as retail traders do not know what's going on in the market. These are just the theories that are being floated around, and it does make sense. It fits. Right now, this is looking bearish. I think we could see a further drop here if we see stock markets keep dropping, but at some point I would look for this one to reverse, and in the long run I would expect essentially price to go back up. But in the short term, on margined or leveraged funds, this is not a good buy, but in the long term this may be a good buy. So again, neutral on this one as well. Oil seemed to be holding up now. It doesn't look bullish at this point. As we can see, there was a huge drop, but it seems to be holding on for now. But if we start seeing more, so my bias is still to the downside, but if we start seeing more concerns between, and let's say Saudi Arabia and Russia are not able to come to an agreement, or OPEC and Russia are not able to come to an agreement, we could see further drops in this one. So oil, we could still see my bias is to the downside, but watch out for short-term pullbacks and keep an eye on for developments in regards to Saudi Arabia and OPEC. Like I said, if they come to some sort of an agreement, then we are likely to see a move back up. But until then, oil is still, my bias is to the downside in the short term. So we could see a retest of 27.80 before they kind of get everything sorted out. And then copper here, copper was dropping. And like I said, on Friday, things just moved around completely. Everything turned around. So copper has pushed back higher, but I think we are far from the problems being over. And as a result, we could see a further drop here in copper. Right now, this looks neutral, but I would say if it holds below this 2.50 level, this support resistance level, I would look for it to drop further. So my bias is still kind of neutral to downside more than the upside. Okay, Bitcoin took a dive here, and we had talked about it kind of went even beyond. So it didn't quite hit the second target here, hit the first one, went through the first one. And again, the theory that's being floated around here is that people are liquidating their Bitcoin holdings in order to divert that money into the stock, or the losses that they're taking in the stock markets, because everything's come so suddenly. Stock markets were at all-time highs, and then a huge drop just out of nowhere. So as a result of that, a lot of people have been blindsided, especially these big players. They have been blindsided, and as a result, they're pulling money out of these other assets to support their holdings till they're able to get out of it. So for now, this still looks bearish here. We could see more of a drop here, but at some point, I think we would start to see Bitcoin start acting as a safe haven asset as well. But for now, we are, this one, I think we could see another drop towards 4250 level here, back into these levels, even into 3330-ish level here, all the way into 3300 potentially. So keep that in mind. So I think there could be more that may happen. So bearish bias for now for Bitcoin. All right, stock markets here. Stock markets were interesting last week. Friday, as I said, a huge turnaround here in stock markets. And a lot of this had to do with interventions from multiple central banks in order to support the market. I think it was Fed alone did 1.5 trillion worth of intervention in the market. So like I said, that has propped the market up, but I'm not bullish on stock market. I'm still bearish on this. We could see more of a pullback before we see a drop, but I am more biased to the downside than I am to the upside here in the stock market. So I will look for revisit of this 2400 and even 2330 in terms of S&P 500. So my bias is to the downside for the stock market, but keep in mind that it's the short-term moves that can kill us. So just something to keep in mind here. So in terms of Nasdaq here, this is looking bearish here, and we could see a further move to the downside. We could see a retest of 8150, but I'm still biased to the downside overall for Nasdaq as well. Target would be 6930 and then potentially 6600 for this. So bearish bias here. Same thing for Dow Jones. Big move, as we can see, big move here on Friday. But I am not convinced of this bullishness. I think this is just a short-term bullishness here. We are likely to see a drop. So my bias is still to the downside. Now we could get a bit more of a pullback, but I'm looking for a drop here, retest of 20,350 and potentially into 19,800, but overall bias is to the downside. Same thing here as well. We did see a pullback, but I'm looking for a further move to the downside here. Now, with this one, we could see deeper pullbacks, but bias still remains to the downside here. So that's sort of what I'm looking at. We could see more of a pullback, but looking for a drop here. 8,700 would be my target for DAX here. And then FTSE, big drop. And on Friday, we saw a big move up here. With this one, still looking for a further move to the downside. Now, in the short term, we could see a bit more of a pullback, but I'm looking for a drop, looking for it to go and retest the low here. So target is to the down, target is 5,200, bias is to the downside here. So bearish bias for FTSE as well. And then we have Nikkei here. Nikkei also on Friday, we saw a big move to the upside here. It gave back almost half of that move that we saw to the downside here. My bias still is to the downside, and the first target here would be 16,650. And then let's just zoom out a bit here. And then second target here would be 16,120. So bias is to the downside. But like I said, we have so much intervention in the market right now that there can be a lot of volatility and back and forth moves, sudden moves. So that's something we have to watch out for. Just volatility may be a killer in the market right now. So we just need to be very, very careful, because things that would normally move about 100 pips in a day, so average to range, if was 100 pips, we are seeing those move 500 pips. And that's all due to these, due to the increased volatility and interventions in the market. So that's all I have for now. But overall, I would just say we just need to be cautious in these markets. These are unprecedented times right now. So just be aware of that, and smaller trade sizes, what we need to keep an eye on. All right, you guys, be careful out there this week, and I will see you again with my daily analysis on Monday. I usually post it on YouTube in the Asian session, so keep an eye out for that. If you would like to get the targets that we have talked about today, you can go to tradingwithvenus.com/forecast and download the spreadsheet. And I will see you later. Bye for now.